What's going on, everyone? Welcome to the Investing Bros Show. And in today's video, we're talking about this morning's inflation data report that has come out. What will its impact on the crypto markets look like? Before we get in, though, make sure to smash the like button and hit subscribe so you don't miss anything coming from our channel as we continue to prepare you for everything you need to know on the charts and in the news to make sure you're investing correctly in these markets. You can do it. Just follow along. Make sure you're subscribed to the channel. With that said, let's go ahead and jump on in and look at the numbers this morning. We had a lot of different data points come out. The biggest one that's going to get a lot of headlines was inflation rate year over year coming in at 2.4%. That is lower than last month's 2.5, which means inflation is technically still flowing in the right direction, but it's higher than the expectations, which consensus said 2.3%, forecasted as 2.3%. So this is going to be some mixed data that we're looking at right now. Some people are going to see this as continual positivity, that inflation is still dropping. Others, though, will say that it looks like our ability to get down to 2% is getting diminished, and it's going to be borderline impossible. We're going to have to watch how the markets respond today to get that 100% figured out. But some other points that you should be aware of is core inflation year over year. This isn't going to get as many sexy headlines, but it is very important because it has the largest impact on what you're actually doing when you're purchasing goods, when you're living your life. And that actually rose slightly. Last month, it came in at 3.2%. The expectation was 3.2 to 3.1, so this would drop. It actually came in higher at 3.3%. So that's not the greatest detail in the world whatsoever. The other thing we're looking at this morning is initial jobless claims came out higher than expected, up to 258,000, where last week, 225,000. The expectation was 230 to 227. So that detail actually is kind of, I'm not going to say necessarily bearish, but it is saying, all right, the jobless claims are rising, and they're rising a little bit faster than we thought, especially this week. Now, how much of that is impacted potentially by what's happened with recent storms? We actually, even last night, had another storm hit the state of Florida, Hurricane Milton. I'm not necessarily certain at this time what the details of those storms' impacts on these numbers are, but what we need to know from an investing standpoint, inflation rate higher than expected, but still coming in the right direction. Core inflation is slightly high, and unemployment looks like it's going to the upside. Before we jump into the charts, what does this mean for Jerome Powell and the Fed? And here's where I'm going to kind of take more of a bullish stance. I'm not saying we're about to rip up to 70,000 by the end of tonight, but I do think that this information coming out today should still lead towards a bullish response. And what I mean by that is Jerome Powell and the Fed are going to have to make a decision here in November about what they want to do with interest rates. Do they want to keep on cutting? Do they want to cut dramatically? Do they want to, go maybe a pause and kind of wait and see what happens next? Well, with their dual mandate of making sure inflation is supposed to be going back down towards 2% and that unemployment's not getting out of control, the data here, while it's higher than expected, inflation is still going to the downside and unemployment's going to the upside. Well, what's the response they're going to need to have? They're going to need to go ahead and be more persistent in cutting rates. To me, I think this just about locks up. We're at least going to be getting a 25 basis point cut here in November. But could we begin to have that conversation once again about going to 50 basis points in November? If you go back over here and look at the predictions chart, this morning we're still hovering around 80% saying 25 basis points. There's about 20% saying we should stay paused. We'll watch as this develops and unpacks. The thing is, if we were to cut rates by 25 or 50 points, that will continue to add liquidity into the space, which is good for any market that you're looking to invest in. But let's take a look specifically at what Bitcoin is doing. You can see here over the last couple of days, after rallying back up to 64,400, we started to take a little bit of a dip. And the two levels we kind of told you guys to watch out for were 61,600. We bounced briefly. Then we had a nice breakthrough there. The next level we told you guys to keep an eye on would be down here below 60,000. Right at about 59,600. Why is that level so important? Well, when you look at the liquidations charts, you'll see that we have some heavy, long liquidations that kind of start to trickle out right there around 59,600. So while this morning we saw a small little bounce in preparation for potentially favorable numbers, which Again, it's kind of debatable at this time. Are these numbers favorable or not? They're higher than expected, but still lower than last month. At the moment, I'm still in that lean bullish. That doesn't mean, though, that we can't come down and fill this liquidity. Why? Because the numbers were not so bullish that it's just a runaway to the upside. It absolutely could allow for a decline in price action. But let's take a look at what our oscillators are saying this morning. We were nice and primed here on the 1 hour chart. In fact, we kind of do have a buy signal in play. Let's make sure this fits our 12 candle pattern. It doesn't. All right. So we have a broken buy signal, I guess I could call it. What I mean by that is what we love to see on this channel. We love to see the trifecta of bullish indicators here. We had a green reversal. We had bullish momentum on our oscillator. And right now we've crossed back above that threshold, that bearish threshold on the money flow. We've had excessive sellers lead the space. But we like to see all three flash within a 12-hour window on any time frame. In this case, it actually took 16. So I'm going to call it broken, meaning do we have all three of them? Does it look like all three want to move in the bullish direction? Absolutely. But it's not an official strategy proven, tried and true long here on the hourly chart. It's something just to keep an eye on. We got to continue to watch what this looks like over the next little bit. If it works out the way it could, let's go and look at our indicators here from Lux Algo. That could send the price back up here to 61.6. But again, as that was a former level of support that we have broken through, it very well might be a strong level of resistance that gets rejected and then moves back down to the downside to get this liquidation level. You see an order block in the same camp around 59,900 or so. So this area definitely still looks very, very intriguing according to our Lux Algo indicators right there. The other thing you'll see is that's probably going to be right below our golden pocket. If you come back to the lows we had in September to the highs we had at the end of the month, we do still have, actually it's a little bit lower. I guess I was looking at back here. The golden pocket area, the 0.5 area is going to be in that 59.3 area. Golden pocket actually is suggesting from this longer time frame of September that we could still make a move closer towards that $57,000 mark. I think it'll be the shorter time frame. Let's go in here and take a look at what we have going on right here. This is the one that I think we had the golden pocket right there. Yes, now we bounced off of the platinum pocket, but I like this longer time frame Fibonacci to keep an eye on. Again, 0.5, the 50% pullback in that same camp, that area around that 59.6. Again, this level right here is just liquidity. We absolutely could drop lower. So keep an eye on this level, 59,100. It's been support and resistance in the past, but golden pocket, absolutely. With the news we have today, long-term still being bullish, but in the short term could lead to a little bit of a sell-off. 57,000 is once again on the table with that golden pocket, with that long-term levels. I believe even if you come out here and you take a look at longer time liquidations, let's go to the 3-month chart. I think you're going to see that we still have some liquidity that comes down. Yes, right in here you see some interesting stuff. Let's go to the 1 month and it might pop up a little bit more yellow. There we go. There's a lot more. You get through all this down here at 60,000. You technically still have some that comes down, but you have your last little pocket of heavy long liquidation sitting right here around $57,000. So that to me is kind of not the guarantee here. There's a chance that we bounce because this information still is long-term bullish, but it gives you the opportunity. If you were a long-term trader, long-term seller, and you're sitting here saying, is the data, is the information ready for a long-term bull run? You can say, well, we have a little bit more room to the downside. We can absolutely get the price back down below 60,000, potentially push it down to 57, still set a higher low than recent lows set back in early September. This is still a very bullish trend. It's just a bigger pullback. And if you kind of look at what we have going on here, this would make a lot of sense to see a matching of this movement from the recent peak. That's going to put us pretty much right just above that same area right there in the golden pocket and $57,000. So keep your eyes on that at the moment. My two targets to watch, we are looking to the downside. 59.6 is the first one. 57,000 is the second one. Look to scoop up some more Bitcoin if you have the ability to do so. But I want to kind of leave you with this thought on the markets once again. Is inflation numbers higher than expected? Absolutely, but they're still dropping to the downside. Liquidity still should be coming into the market because the Fed is more than likely going to use this data to say interest rate cuts need to continue. Inflation's not out of control, but jobless claims, unemployment numbers could be starting to go to the upside. You got to start cutting rates to fix that. This is all bullish for the crypto markets. Let me know in the comments, though, what you think. Make sure to drop everything you think out in the comments. Hit the like button, smash subscribe so you don't miss any of our content, and we'll see you in the next one. Adios.